All right, what's going on, everybody? Welcome back to another episode of Inside Bitcoin Spaces with Jason and Andrew.
Hey, everyone, welcome.
Today is Friday, March 13th, 2026. Bitcoin block height 940,535. Bitcoin USD price 72,620 US dollars. Andrew, welcome in.
Thank you, sir.
So Bitcoin price rebounds above 70,000. That's pretty nice.
Yeah, that's gonna make some folks feel less bad.
Yeah.
Right. So I don't know. It's like people have been talking about like how emotionally sort of like destroyed some people have been, and then I've seen more accounts where people that have now been through these swings are like, yeah, it's nothing. So I think the tolerance for these kind of swings is just more and more robust, right? It's like I was hearing rumor that we would see 50% drawdown. I mean, they talk about 80% drawdowns from the high. That would have been much lower. So, there's also this whole the thing in the last cycle that was kind of emerging was this whole 58K club.
Yeah.
It's like it seemed like it was stuck at 58K forever. And I'm not a technical analyst guy, but they always talk about floors and ceilings and resistance and breaking through resistance and Fibonacci levels and stuff. I can't follow all that stuff and get too excited. But when you think about it from a perspective of these are largely human participants, then there's always psychology. You think like if you were an early Bitcoin buyer and you got it at say 1,000 or something, you probably put something in your mind like, okay, man, when it hits 100,000, I'm selling. Even if you later kind of became more convicted that it was like sound money, you probably had certain mental things in your mind that were kind of stuck there back to when you were thinking about it more from a fiat perspective. And those things are human. It's like, you kind of like, you look forward, it's like, man, everybody jokes about the Lambo, but maybe some people are like, man, if it hits 100,000, I'm going to pay off my house, which isn't like, you're trading one type of asset for another. Now they have different properties and characteristics, but it's not a bad move, right?
You got to live. You have to live.
Yeah, you got to live. You got to live and stuff. So, maybe there was a lot of that, but I think we're kind of on the march back up. And I don't know, there's just so many macros forces. You got this war in the Middle East. You got, commodity shipments being interrupted. I've been watching the silver price and the precious metal prices, and while they kind of, everybody likes to compare them to like Bitcoin and the stock market. Do they differ? Do they follow? Are they doing it? Gold has been pretty stable, pretty robust. Silver has swung around and seen some major like takedowns, but is kind of like rebounding, getting its footing again. So we'll see. But there's also word and more sort of things where the private equity markets are seeing a lot of strain, and we've seen some bank collapses already. And we don't need to get into it here, but for those that are interested, there was this economist named Exter that had this whole derivative pyramid of value sort of thesis. And it's pretty, I think it's pretty sound. But the net, too long didn't read version of it is once the derivative system starts collapsing, you'll see a cascade of collapse.
Oh yeah.
And having Bitcoin in that situation and probably other things, including real estate and real property that you can, like we always say, right, take possession of, no counterparties.
Yep.
is going to be the place to be, whatever form that takes for you. So yeah.
It's only a matter of time. Self custody
Yeah.
is important. Digital self custody, that's what the invention of Bitcoin is.
That's
Massively
right.
important. What an amazing invention. So, what do you think about in the short term, though? You think we're going to see a dip? Because a lot of people still are bearish, saying Bitcoin is going to dip according to the 4-year cycle. We're in for a long road ahead, a long bear market. Now, personally, for me, I don't agree with that. I think this is the 4-year cycle is broken. This is going to be a dip. It'll last however long it lasts, but I think we're going up before the next halving, after halving, whatever the 4-year cycle says. I think we're going up this year or next year.
Yeah, I see a lot in the Bitcoin press, media, that people are saying the 4-year cycle is broken and that we can't really follow it anymore. Bitcoin following the stock market has been a pretty good correlation, but it hasn't. If you look at it in terms of like money supply, then you can say, well, that's why, because it's like, more money, higher prices of everything. So it just follows that. But again, everybody's looking for that divergence. I think there's more momentum in other types of instruments. We have the ETFs now. We've got pension funds that are using, Bitcoin as a component of their portfolio. These are big institutional players. And I just saw this morning. Who was it? It was one of the stands, I think. Central bank, the first central bank purchase of Bitcoin.
Oh, really?
Might have to look that up.
Who was that? The Federal Reserve?
No. I think it was. It's not Pakistan.
Okay.
Hang on a second. I'll try to find it while we're looking.
All right. Yeah, I mean, that would be a pretty big deal, but really, I want the people to buy it. Hopefully the people wise up, the common folk, and they start self-custodying Bitcoin. But it's unlikely that the masses do it because a lot of people would just follow. So we'll see how that shakes out. It's more likely that the smarter people, they're rich for a reason. They're smart. They're going to be the ones that gravitate to Bitcoin and use Bitcoin.
That's right. So I found it. It's actually Czech National Bank. Here, I'll share for a brief minute here. Oops, sorry about that. Czech National Bank buys 1 million BTC. Now, why?
So they bought
is this
13.75 Bitcoin? Okay.
Yeah.
Nice.
Oh yeah,
nice.
I have.
It's a nice stack.
Do you have this? This is a good one. Do you have this plugin, Opportunity Cost?
No, but I seen that. Isn't that like Marty Bent's or somebody's?
Yes.
Yeah.
Yes.
Yeah. I saw that. Yeah.
Yeah. So I often, it defaults to having it enabled. If I turn it off, it'll get rid of that Bitcoin. So that wasn't in the actual headline.
Oh, sweet.
But
that's nice.
My plugin, whenever it sees a dollar amount in an article, it'll stick it in there. So
turn that back on. Turn that back on.
Yeah,
that's awesome because that's how my mind already works and thinks. Like, oh, 1 million in Bitcoin, yeah, whatever. 13.75 Bitcoin.
Yeah, see, like right here, it'll throw in the Bitcoin equivalent.
Wow, that's really cool
of stuff. But it works on everything, like any website. So you can like pull up Zillow or something and shop for houses based in Bitcoin.
Yeah, that's
something.
Awesome.
Yeah, it's Marty Bent. It's TFTC.
Yeah.
Is his website. Truth for the Commoner. It's a really good website.
Marcus
I know
Dent.
Marty. I've met him. Yeah. So anyway, but the point, the important point is like, is that a central bank, if you understand what that is this is typically a private entity that a government gives permission to issue that country's money, right? And it's kind of a cartel. It's kind of a it's basically a commissioned right that no one else then has in that country. and there are very few countries that don't have central bank. I think North Korea and Iran, maybe not long for Iran. And this is like how monetary issuance gets controlled by the governing powers, right? And while there's been a lot of central bank buying of gold because they have, there was this thing called Basel III, the monetary system kind of reclassified gold as a what they call a tier one asset. Well, another thing is that there's new rules that they've given to themselves that says actually crypto assets are kind of can be considered partially in underwriting things. So they're even kind of the enemy is coming around. See the fact that Bitcoin is something that's got qualities that they want to add to their holdings. So yeah, it's kind of a big.
It helps them. It
problem.
Preserves their wealth because they self-custody. They take it, but they're going to try to sell derivative products, paper products backed from that Bitcoin to the people. And that's really how we save humanity and save yourself. You have to be the one that self-custodies. All these people buying MicroStrategy stock and all these stocks because they themselves, the companies, are buying the Bitcoin. It's silly nonsense. You yourself have to be the one that's buying and holding the Bitcoin self-custody. Otherwise, you're not getting any of the benefits. You might get the fiat increases, but so what? The fiats are free to create and unlimited in amount. It's Bitcoin that's important. It's proof of work. It requires energy to create, and it's limited.
That's right.
Speaking of limited, the 20 millionth Bitcoin has been mined. Was mined on March 9th. So that's over 95% of Bitcoin's total supply of 21 million has now been issued, leaving just 1 million Bitcoin to be mined over the next 114 years.
So yeah, with Michael Saylor buying it up, with central banks starting to buy it up, you have to start asking yourself, where does this stuff come from to buy?
Yeah.
Right. Also, ETFs, if there's large inflows, they're required to buy. That's part of what they are. If any of these institutions, family offices, hedge funds, et cetera, want to get in the game, they have to buy it. Now, they might buy the ETF because it's easier for them to do so, but they're indirectly buying it, right? Or they're forcing purchase of it. So like we were kind of mentioning earlier, it's like, well, if you bought it at 1,000 and you kind of mentally said, hey, when it gets to 100,000, I'll like pay off my house or something. Well, then, yeah, there's going to be some sales of what they call whales or OG types of Bitcoin people. But I mean, it doesn't feel like there's a whole lot left, right? And when Satoshi kind of put this whole issuance graph, I wish I had one handy to show the Bitcoin issuance. Of course, it would show like a big arc, like a bunch gets created early and then it gets slower and slower and slower. And now we're like fighting over this last little thin slice, the last million, right? And I think to the uninitiated, someone first trying to understand Bitcoin, they might look at it and say, well, it's over. Yep. It's like, I'm never going to be able to buy any because there's not going to be any left to buy, and miners are going to not have any revenue because when a miner mines a block, they get two components. They get the block reward, which is the part that's getting smaller and smaller, and then they get fees for all the transactions they stuff into that block. And right now the fees are, I can bring up probably less than one, right? Mempool space is always a good one.
They were creeping up. They were like 2 to 3, 1, 2, 3, something like that. Sats per VByte.
Yeah. I'll just share quick just to show what people. This is always a good. Oh, dang it.
So 2.
So 1, 2, 2. Actually, it's been 2 for a while. 3, 4, 4. Oh, it spiked up a bunch. But then look, you get this. Like you get blocks that aren't even filled, right?
Yep. Those are the
So,
blocks that come quick.
yeah. Yeah. Sometimes it's like they just, the whoever mined it just, doesn't want to be, I don't know what their motivation, doesn't want to be bothered with it. They changed the lower limit to be less than a sat per V byte.
Yeah.
Such that a lot of these tiny rate limited things, but all this green stuff is like blocks to be mined. So there's enough pending transactions to theoretically fill up. Gosh, what is that, about 8-9 blocks? Well, about 1, 2, 3, 4, 5, 6, 7,
41,000 unconfirmed.
Yeah. So, and this is like a pictorial of the next block theoretically getting filled. You see stuff moving around. That's stuff that maybe gets like pushed out, and new stuff comes in that's got a higher, that they're offering to pay more. So already in this next block, we can see that it's around 2 sats per V byte, but some stuff in there is still as low as 1. So, but anyway, enough of that.
Get your UTXOs consolidated. I'm sure a lot of people have already done it, but a lot of people procrastinate. So now's a good time. When the price goes up, back up, probably we'll see more activity on chain, and the fees will be higher. I would.
Well, I think too, you have to remember that as the value of Bitcoin goes higher and higher, then those mining rewards are still, very profitable.
Oh, yeah.
Like, just because they're getting less and less doesn't mean that their profit and their incentive to do so diminishes. And I think that's something that people don't understand. And then they say, well, the last block will be mined at like 2160 or something like that on the schedule.
It's 2140.
2140, yeah. And they're like, well, what incentive will miners have to mine Bitcoin blocks from that point forward? Well, the answer, and we already see it, is like the component of the reward to the fee revenue will be completely fee.
Yeah.
And and this is also presuming that it's going to be a vibrant, store of value and transactional medium going well into the future. That won't happen in our lifetime unless we get like, our cloning and transferring to new bodies and stuff happens, but I'm not banking on that one.
Don't die. We got to live for a long time, hopefully. Bitcoin incentivizes that, you're going to be wealthy,
there you go.
Extremely wealthy.
There you go.
You want to live.
There you go. Well, I mean, the, with like you mentioned, the sailor buy is a constant drain as well. You got to, and I'm starting to see this more and more as well, that the Bitcoin community, I mentioned precious metals, but they've like claimed for decades that, there's been manipulation in the market. In fact, JP Morgan's metal desk traders were caught and imprisoned for manipulating the market, and huge fine paid by JP Morgan. They just sloughed it off as cost of doing business. But what's interesting is like how Bitcoiners are starting to say, well, wait a second, is there a possibility that there's some manipulation of the market, price in the market? It's like, how does this work? Can you have paper Bitcoin? Can you have derivative Bitcoin that's now influencing the price? And I think you can't deny that there is some influence. It may be difficult to quantify, but yeah, it's just like it's becoming like everything else in certain ways. So anyway.
Which is why it just points back to self-custody. Self-custody is extremely important. All this paper Bitcoin, this digital vaporware Bitcoin. You could have endless derivatives, but self-custody stops that. 21 million Bitcoin, you got to self-custody it.
That's right.
All right, so something else that's interesting that happened this week was Magic Eden. They officially sunset its support for its Bitcoin marketplace, which at its peak controlled over 80% of ordinals and runes trading volume. So for this makes me think that the whole Bit 110 thing, the whole spam on Bitcoin, where we have to make a change to Bitcoin is overblown and it's not needed when one of the most popular places, Magic Eden, just stopped supporting runes and ordinals. They're just no longer supporting it. You go to the website, you get the 404 error. It's just gone. There's no mention of Bitcoin on their website. So the spam thing, with the JPEGs and everything, it's just going to weed itself out. It's going to work itself out. People tried to make Bitcoin off of it, but it's turning out to be not so profitable anymore.
Yeah. Thankfully I missed that whole, my education was still coming online when all that was going on. So I was probably blithely ignorant of that whole initiative.
You didn't mess with them, the ordinals or the runes?
No, I didn't. But there are some interesting things that I keep meaning to go back and study more. One is something called counterparty.
I've heard of it,
but
yeah.
we won't.
But they got their own token, so I don't like it.
Well, they do, but as my understanding is it was provably burn, sort of one way value transfer.
Okay.
Again, I have to look at the details to kind of understand it better.
Turns me off because I like Bitcoin only, but
Well, I mean, in terms of how it relates to Spaces, I mean, Spaces also burns coin for the auction process. So that sort of idea isn't per se new.
It's not. You're right.
Which is another talk about the last million. Well, if we keep burning stuff, then it's going to be less and less.
Yeah.
And I think anyone that's looked at this arguably will say that, there really isn't 20 million to be sold today. There's a large caches of supposed Satoshi, coins that are idle and have shown no inclination to move. And that there's been some amount of burn tokens, provably sent to provably unspendable addresses is what that means, right? That are no longer available. So the net total supply is something less than 20 million.
Yeah.
Which means everybody that's holding it it's that much more scarce, right? What that is, I think, you get different people's idea of it, but I think it's probably easy to say that there's probably at least 1 million that can't be spent
Easily.
And never will be. And people lose their passphrase. I heard a story. Remember the LA fires, the Palisades Hills fires that happened was it last year or so? And I remember somebody saying, "Yeah, I had my ledger in my safe in my house, but the password was written on some paper or something that got destroyed in the fire." So stuff like that happens, or people get hit by a truck and forget to tell their heirs, friends, whatever, that, oh, by the way, something ever happens to me, go looking for this.
Yeah.
So, I mean, who knows how much stuff is just lost due to negligence and just misfortune, right? So we just don't know. So we can only guess. We can only look at the blockchain and kind of look at the activity and try to make a guess at what the true sort of amount is. So yeah.
Yeah, and I think that will come into play, the scarcity, when we actually start using Bitcoin. Right now we use dollars for our bills and as our currency. I think we really need to start using Bitcoin in trade. And I think it's the merchants that will start this, because the merchants will say, I demand Bitcoin. I want Bitcoin. If you pay me in Bitcoin, I will give you a 15% off, something like that. Then it will be like, ooh, there's an incentive now. I want to use my Bitcoin. I want to spend my Bitcoin. And I think people are saying, the whole, there's some theory out there or some law, Gresham's law, I think it is, where bad money pushes out good money, meaning that people are going to spend the crappy money and hoard the good money, which makes sense. I think that does make sense, but I think it ignores the merchants, where of course, the spenders are going to want to spend the bad money, but the merchants, they don't want the bad money. They want the good money. So I think spend and replace could really benefit everyone. Spend your Bitcoin. If you spend whatever amount of Bitcoin, just replace it immediately. Very simple.
Yeah, and I think that's a great. And people talk about using that strategy, that spend and replace, and I think it has a lot of merit. But that also implies a certain conviction into Bitcoin, right?
Right.
And one of the things, and I just saw this, I think yesterday, I'll share it again here. I saw that was kind of like, well, it's not directly related, but it kind of supports this. And that is this announcement from Tether. Now, you might know Tether as being a, largely a stablecoin company, and they're the largest, I think, US dollar-backed stablecoin thing. But they have been making announcements about putting assets and stablecoins on the Bitcoin blockchain. So if you go down here, read. So Arc Labs has this. There's this Arc protocol, which is like Lightning. It's another second layer 2 protocol that allows you to transact without having on-chain activity. But it's like, this is a Bitcoin infrastructure, and just the fact that it's Bitcoin infrastructure, even though it's moving stablecoin value around, to me shows a commitment. And Tether's founder was very much a Bitcoin maxi type, and has always believed in Bitcoin. So this is in tune with the ethos of the company. But while they talk largely about, the accelerate the development of Bitcoin or stable coins, but it's like on Bitcoin, the infrastructure on Bitcoin. So this is I think, generally positive. What does it mean? It means that people are comfortable with just dealing with dollars. They know what it means. They know what things cost in dollars. If they kind of start using these sorts of technologies, they're going to get used to just the process, right? Just using a wallet, just, having control, because, they're exercising sovereignty. Now it's sovereignty over a fiat-based instrument, but still, it's a mental step in the right direction. And I think when people have a wallet on their phone with a couple different balances, maybe they get a little interested in Bitcoin, or their friend tells them, they buy a little. It's sitting there in their wallet balance in their phone right next to their USDT or whatever balance. And when they do nothing and see that their Bitcoin balance goes up, but their USDT balance just stays with the same, if they're not doing any transactions, what's that going to tell them? It's like, well, wait a second. It's like, I'm not making any money holding my stuff in Tether, but yet my Bitcoin balance keeps increasing, presumably. That's like a pretty good indicator, testimonial to them. It's like, oh, maybe I should just move this into that, and then when I need that again, I'll just move it back or whatever. That's just it's the start, right? It's getting people thinking along these lines. So we'll see.
It's really a confusing thing where we say Bitcoin, the value goes up, but really it's the dollar value that goes down. Now, me personally, I'm not a fan of any of those stable coins. I just think stable coins on Bitcoin is dumb. It's like runes, it's the same thing. Tokens on Bitcoin. I'm not a fan of any of that. I think in the short term, it'll be bad because it takes away from Bitcoin. It's just another derivative. Yes, it's built on Bitcoin. It's Bitcoin infrastructure. But I think it's wasteful and it doesn't make much sense. Although I would agree with you that in the long term, it is good for Bitcoin because, like you said, people will get used to using the wallet, self-custody, things like that. And then they will eventually realize that Bitcoin is the asset, is the currency, is the money that you want. And these stable coins are just fleeting, hot garbage. They're really nothing. So long-term good for Bitcoin, but in the short term, I think it's just humans. We have to go through this experimentation. Everyone's trying to
Yeah.
do something.
No, I agree. I think of it as a transition sort of step. I don't think it's not the end. It's just getting there. And, you know, I harp on this a lot. It's like people don't realize that changing your thinking about stuff, especially something that's so embedded in our understanding and our life experience, which is,
Money.
how we think of money is it's a huge mental shift, and it's going to take time. I mean, some people will argue we have to wait for a generation to flip over before it really starts taking place. But yeah, it's another topic.
We're almost there, right? 17 years or so Bitcoin's been out.
Yeah, that's almost a generation. But
Yeah.
again, when was the true kind of broad enough awareness kind of when did that happen? That'd
Prob-
probably be the first point where you should say, okay, from this point going forward, let's count a generation and then see where the opinions and attitudes land.
I
You
think it's
know,
probably in this decade, probably like the 2020s. So we're probably only like 6 years roughly into that.
yeah, I would say that's probably closer to it. Again, people are probably going to debate this for decades.
Yeah.
So, but anyway,
Yep.
so what else you got
All
going
right.
on
So in
the?
other news, Kraken secured Fedwire master accounts. So this allows Kraken to settle US dollar transactions directly on Fed rails, eliminating reliance on intermediary banks. It signals growing regulatory confidence in Bitcoin, but I think it could also be a bad thing because integrating these companies with the Federal Reserve, Bitcoin, and the Federal Reserve, it's possibly bad for users' self custody because, again, we get reliant on these companies to hold our Bitcoin and we start using these derivatives. So it's going to be a long battle between custodial custody and self custody. And I think without
Mm,
self custody, you lose, obviously, you lose all the benefits of Bitcoin.
yes, and if you look into the details of this, and I've read some reporting, is that while they got a Fed banking account, it came with caveats like
Mm.
they can't do certain they didn't get like what they call a full commercial banking license. They got kind of this banking banking relationship light
They got the
in
baby
that.
step.
Yeah, it's like a baby step. Now it's like what we were just talking about. Still, it's a step.
Yeah.
So you can't deny that. But any people have to understand any of these exchanges, doesn't matter. Kraken, Coinbase, Binance. I mean, those some of the bigger names people will hear. These are all institutions that have one foot in the fiat world and another foot in the crypto world,
Yeah.
right? In the blockchain world. And that's why you have to KYC the hell out of yourself when you deal with these things, right? So you can't just open a Kraken account without anonymously. You have to provide picture, state issue ID, and stuff like that. If you've been through the process, it's a pain in the ass. Actually, it's not something you do instantly either.
Yeah.
It's something that takes a little time, and try to do it as a business. I've done both. Like you try to get an account as a business, it's like, yeah, it's expect it to be about a 2 to 3 week process to get final approval. And that's before you can move any money in. And you better have a business account in the business name, a banking account with some banking institution in the business name. Otherwise, you're not going to get a Kraken account, or as an example, in the business name. But again, all these things are like there's a foot in the fiat world that is very banking regulated. It's a regulated industry. There's a lot of things that go with it in the crypto world. So while there's ways to attain crypto without going through that mechanism, it's what we call in the kind of the on ramp, off ramps.
Yeah.
What these institutions are. So it's like one of the kind of threats against Bitcoin as a system is if these on ramp, off ramp sort of
Yeah.
mechanisms become like unavailable to us. So there's ways to get around this and other ways to acquire and dispose of Bitcoin. But you got to then figure out how that works and how to go through those hoops. It's just different. And, the assurances are like much less. So it's, I look at it from it's making their operations a little more efficient right now, the way it's stated, in that when they receive a bunch of, cash from deposits, that they can put it in, directly pay off stuff and interact with the Fed system, because the Fed is the upstream entity to all the commercial banks, right? So, but I think one of the things that's kind of sucky is that Caitlin Long of Custodia has been trying to get the same sort of bank account forever, and her setup is completely, Bitcoin oriented and completely in the state of Wyoming, which has got some special laws that kind of allow for interesting Bitcoin oriented things. And the fact she didn't get one, I'd be suing the Fed to say, why do they get it but I don't? So, and then the likes of like Jamie Dimon, JP Morgan are kind of crying. It's like, wait a second, you can't give them the same sort of privileges we got. They're not following all the bank. And if you look at the details, I don't think they can loan. They can't. There's a lot of things that they can't do. They're not subject to deposit withholding insurance and stuff. Not like they ever were. But anyway, it's like, yeah. But it's a step, and this kind of leads into the Stable Act, which is currently being hotly debated in Congress. And the banks don't want the stablecoin issuers to like offer some sort of interest, or they're calling it awards. But the stablecoin issuers do. Coinbase put a big stink up and kind of is saying, look, we need this, otherwise we can't be competitive. The banks are saying, yeah, but you're not going to have to follow the same regulatory frameworks that we do. So we've got extra costs and assurances that you guys don't have to. So it's a big fight. We'll have to see where this lands. But at the end of the day, it does affect us at some point. So.
Yeah, I think it just puts a spotlight on silly human games, where it's politics. It's all about who you know. Caitlin can't get in, Kraken can get in. All these silly games, we don't need it. When we have Bitcoin, this is transition period, like you said, where we're transitioning from fiat to Bitcoin. But once everyone just realizes, and it can happen in a snap of a finger, it's just unlikely because everyone has to change their mindset. But once that happens and people start trading and using Bitcoin peer-to-peer, we don't have to be in the cool kids club to get in and get special privileges. And this group can create dollars for free. And this group, the public, can't, or else you go to jail. It's called counterfeit. Even if you're using the exact paper, ink, machines, and you make it to the exact specifications of the $100 bill, you still go to jail. It's counterfeit. But these people over here have legal authority. It's a silly system, really, when you look into it. Problem is, most people aren't looking into it. They are busy working and busy watching sports and entertainment.
Yeah,
there's a lot of pitfalls.
You might say that's by design.
Yeah, you might say.
But yeah, we won't dive into every single side rabbit hole that links to this conversation.
Endless, right? But it's endless.
But it is interesting. I mean, it's like it's another kind of step. Just another thing I saw recently is evidently the Cynthia Loomis part of the bill that the de minimis exemption in terms of crypto holdings and tax, whether it's a taxable event or tax reportable event. There seems to be like a lot of the stablecoin issuers, they want that de minimis exception for stablecoins, but not for Bitcoin. Like they're like, hey, their argument seems to be, hey, stablecoins are used for commerce, like for transactions, and Bitcoin is used for like investment, for store of value sort of reasons, and they shouldn't have the same, treatment. And Marty Bent, again, we mentioned him earlier. TFTC is his site again. Has a long article recently about what's been happening with this. So it's like, yeah, the fight is real. It's just happening kind of behind closed doors,
Yeah.
closed doors. So yeah, again, just to what you said, it's the same game. And so much the premise of Bitcoin is like, we don't want to have to be subject to all these games, all this like privileged gamesmanship. It's like, this is such bullshit. It's like, why can't we have a system where the incentives are just available to everyone and out there and, transparent? And, you'll hear Bitcoiners say it all the time. Bitcoin fixes this. And when they say that, that's there's broad implications to like in all the places, politics and elections and like, how money is spent and not spent. I mean, fraud. There's so much that's wrong with the system, and like, how do you fix it? So
Yeah, I think there's a big fight going on between Bitcoin as a digital asset, right? You heard that those words come into play recently. Digital asset Bitcoin is not a cryptocurrency. It's not a currency. It's an asset. You even have Michael Saylor coming out. There's video of him talking about Bitcoin's not a currency. It's an asset, So that's a big fight. A lot of people that want to keep the status quo and keep creating money for free, creating the dollar for free, they don't want a competitor. Let Bitcoin fit into the dollar system as simply another asset. We'll lend the Bitcoin for dollars and keep the machine moving. That's why I'm against Bitcoin lending as well, because it just keeps the system going. The way to fix it is self-custody Bitcoin and use Bitcoin peer-to-peer.
That's right. So a lot of complexity. Bitcoiners probably long for the day when only they kind of understood it, and all of these problems were theoretical at those stages, and like now we're having to do the dirty work of muscling through all this stuff. Yep. But I think it's good. I think society has to like process this time and these things, and it looks messy at the time because it is messy right now. Yeah. And we'll see where it goes. Hopefully, it'll stabilize in our lifetime. So,
that's true. All right.
I'm hoping a lot faster than that, but anyway, yeah.
All right, so let's talk about Spaces Protocol. We can continue our discussion on how Spaces Protocol can be used to identify AI agents versus humans. How can we tell if it's a bot or a human through Spaces Protocol?
Yeah, actually, I'm going to be, if any of you listening to this are in the Atlanta area, I am going to be having a little lunch and learn at my local Bitcoin meetup location coming up Wednesday, and we're going to be talking about this very topic. Maybe I'm kind of approaching it from how do you distinguish a bot from a human that you're interacting with? I think if you jump straight into electronic sort of mechanisms for maybe trying to do this, anything that's electronic can be copied, right? Except for, of course, Bitcoin.
That's the invention.
So things like, imagine things like, key loggers, like something watching you type in, if illicitly like on your computer, that's like watching you type in stuff, or even cameras that are like looking over your shoulder that may be seeing something written down. These are all real things. And I thought I would start the discussion by, I call it secret handshake, but I thought, let's go back to like the time before electronic, before the internet. And how was it done back then? Because we know these things existed, like, clubs and groups and stuff that wanted to make sure that their membership was, had a certain, we can go back like things like trade guilds and, the Knights of the Round Table and like, look at some of these human things, right? How did, spycraft, like putting a special, you go up to somebody in the street and you say, the rain in Spain, and the other guy says, lies mainly in the plain or something like that, right? It's like and any casual observer, they might just think you're talking about the weather, but that to you is knowing that ahead of time to expect it, and that signals you that the other person can be trusted, that is part of the group, that is a human. And so I think that's where I wanted to start the discussion. It's like, things like seals and secret ink and code words and stuff are all mechanisms that you can use. And why is it important? Well, I think as we move forward, this, like, we see other stuff. I got a couple of things. I saw that this Molt book is like, these agents are like socially like replicating like human sort of tendencies. Like there's things that where they're have their own like social media. This is Molt book thing was kind of a Reddit like social media for AI agents. So it's like, in this case, how do you
It's getting
prevent
crazy.
humans from participating in something that's supposed to be a social media network of agents, right? So this question, I think, is an open one that that is important in our time, is how do we identify that the other person is. Now, to bring it back to Spaces Protocol, well, maybe you imagine a scenario where, in order to kind of, maybe you have to meet somebody physically first, and then maybe there is some sort of task that's required of them that involves the Spaces Protocol. Maybe it's like, here, let's bring up, Spaces Protocol, and I'll share this one quick. For those that are watching that haven't watched all of our stuff, the Spaces Protocol has an explorer called, go to spacesprotocol.org for all the info. This is what they call the explorer. So I say, okay, Jason, we meet in person. I see who you are. Maybe if I haven't met you before, I ask you to present an ID. Now, of course, IDs can be faked, right? So it's like, okay, great. Here's what I want you to do, Jason. It's like, go find this thing called Spaces Protocol. Let's Akron. Go to this site called Akron. It's a Spaces Protocol wallet. It's akron.io for those folks that are following along. Download this thing, fund it with some Bitcoin. So you got to like give up some sovereign value by just doing that. Open a space, and only you and I know it, but let's call it, I don't know. Let's call it Jason 1, or how about secret without not spelled properly, 9423 or something like this, right? It's like, okay, let's just make sure. I doubt, yeah, it's available. Okay, so I say to you, okay, I need you to like go register secret SECRT 943, and I need you to like go through the process of bidding on it, opening it up, and because of the way Spaces Protocol works, it's at a minimum 11 days for you to get this from opening the bid to registering it. And once you've registered it, then you can sign a message. I might say, here, Jason, have a message, says, I am Jason, but I need it to be signed by this private key associated with this top level domain. So, and then if you can do all that, then we'll know for sure that you're human, and we'll then use that signing key to like do other things electronically to that we interact with each other. And I'll always know that you are who you say you are because you went through this whole process, and and now control the keys behind that top level name. So are bots going to do that?
Well, the bots can't do it in the physical realm. So I think the hard part is the digital realm. Now, could we run this same exercise strictly digital? Now we can meet like this digitally, or maybe we don't even meet and show our faces digitally, but we connect digitally in some form of communication. Would just me simply signing a Bitcoin transaction or a Nostr event with my Spaces handle, would that be enough to validate my identity?
Well, I mean, maybe it all depends on what level of sort of, what we're willing to accept, in agreement as evidence that we are who we say we are, right? I mean, AI, I can, I know, for instance, that, you have purple drapes. We've seen it, through several weeks of episodes. I've heard your voice a lot in different contexts. I've seen your face over Zoom calls, but could all that be faked with AI? I mean,
Probably.
we've
Probably.
seen, we've seen situations where a human looking person, they like with face tracking and everything, someone else can pretend to be a different person and with voice and look and gesture like in real time. So if all that can be faked, it becomes it's back to a question of like what amount of effort is someone willing to go through to produce the fake, right? So like maybe Andrew or Jason, it's not worth the effort. But if you were like, Kobe Bryant or somebody like that, where you have a high value personality, net worth, you're very recognizable, and you carry a certain amount of like authority or like, popularity. So someone like that, or president or something like that could be, maybe that's worth it. Maybe that's worth doing a lot of effort to like
Yeah.
pretend to be that person, which is kind of why I started with the meet in person thing and kind of like the whole like spycraft. What are some of the things that humans do that AI can't do? And looking into this a little bit, some of the things are like, well, if I interact with you and then later come back and say, maybe we talk the first time we meet and tell me a few things about your childhood, right? And then I make a note of those. And then later on, I'm like interacting with you and I ask like, oh, well, tell me, where was that? What street did you live on when you were in third grade? You know, and you'll be able to recall that because you have a long context, you have a long history of memory, right? But even somebody impersonating you might get tripped up by that same question, right? Maybe the second time we're on the phone or something, and I think I'm talking to you, but then I ask you that question, suddenly you can't answer it. It's like, wait a second, is that really Jason I'm talking
Right.
to?
Yeah.
Maybe this isn't right. So I think, and I've been thinking a lot about this, like tying these things back to atoms in the real world
Mhm.
is I think potentially an important component to it, but I haven't thought through it enough. That's kind of why the discussion is going there next Wednesday, and I just think it's going to be interesting and more increasingly important. Whether Spaces plays a part in it, that you could build a system around it. One thing that we know from understanding Bitcoin is like it is bound to energy. So you can't just like haphazardly change it or alter it. That's the whole beauty of Bitcoin. And so we have this system that's bound to energy that can't be messed with, that gives us an electronic component to this, whereas other things can't. And other blockchains can't, like proof of stake chains can't, completely. They can be pretty good, but we're talking about complete assurance. So I think, something that's based on the blockchain, but then has its own set of timing and rules and that's what a protocol is, right? It's a set of rules around something. And I think it could be levered for that. Maybe this becomes, one of the main uses of Spaces protocol going forward, because it may be one of the more needed things, maybe things that we kind of always tout as the first thing Spaces Protocol, replaces like DNS, the counter argument is going to be, well, DNS works all the time. I've never known DNS not to work for me. Well, yeah, you're right. It's always there. So what's the point? It's like there's got to be more use cases for Spaces Protocol than just that. And privacy and signing an assurance of who you are and your identity, I think, it could be a really useful one. And just the absolute sovereignty, the no counterparty, the like, this name is my name. I own it. There's no one can wrestle it from my fingers, right? Even if the whole, power of the U.S. military wanted to get my top level Spaces name away from me, they couldn't. Like if I register, I don't know, USAF, hey, it's available, U.S. Air Force, right? Let me get it. And if the U.S. Air Force decides, no, that's ours, we want it, we want to start issuing identities to every U.S. Air Force service member, and we need that USAF, you can like, it's mine.
Right.
They
do that with the DNS, the ICANN, they take all those names.
They can take names. Yeah. I mean, they've got the top level .gov, but still, or in .mil.
But even still, if somebody registered it, they would just take it away. They reserve, they reserve these top levels.
It's not that they can't take it away. It's like they can't take it away by force. They can take it away through legal action. And that's probably where they would go, right? They would say, this is a brand or trademark or something determined to be, of military grade.
What if you lost the keys? What if you lost your Bitcoin keys to your space? How could they get it?
Well, then they would have to wait a year for it to expire. And then they would have to compete in the open market. They would have to watch for it. Then they would have to compete in the open market for it. And if somebody else, make up some acronym that's, the user survey of, autistic friends or something, right?
That's us.
That is a group, right? We've got $1 billion and we're in a bidding war with the U.S. government, of course they can print fiat, keep
but Bitcoin,
upping the bid, right?
It's in Bitcoin. These auctions are in Bitcoin. Bitcoin is limited.
But when you can just print money and give it to Kraken and they'll transfer it into Bitcoin, then effectively they have, the fiat money printer advantage.
But it has to be self-custody Bitcoin, right? Because it has to be on the main chain, on the Bitcoin blockchain. So that's pretty good. Can't be a derivative.
Right? And if they're pushing the price of Bitcoin up by their, desire to get this top level name, then it's benefiting everybody that's a current holder of Bitcoin. Yep. So, I mean, there is that too. So anyway, a funny, it's a bizarre example.
Now,
but
let's say though that they wanted Andrew at UASF. So you got the top level UASF, or whatever it is, USAF.
Right.
You got the top level. You issued a subspace Andrew at USAF, and you took it on chain, and now you lost the keys. How could they get that?
Then you can't.
There's no way.
There is no way. Once a subname has gone on chain, it is no longer the operator. That's what we call the operator of the top level domain. Is outside of their ability to make any further changes to that.
That's amazing.
Yeah, it's an amazing property of Spaces Protocol, and we'll just have to see if some of these kind of edge cases that we kind of think about at times work themselves out or not.
Self-sovereign digital identities. It's pretty powerful.
So when you think about it, it's pretty powerful. I think it's not something people really understand that much. Mm-hmm. Oh, by the way, before we wrap up, I'm going to be holding a workshop at the Bitcoin conference in Vegas end of April and about this. So if you are attending the Bitcoin conference in Vegas this April. Look for a Basis Protocol workshop. I'll be presenting that, and I will be giving away top level names at Bitcoin 2026 top level name.
That's awesome. So that's official then.
Yeah.
Breaking news.
It's official, and you can see if you want to front run me and get this top level name, you can't because
that's awesome.
I already got it. I already got it set up. So
locked it in.
All right. Locked it in. Don't want to talk about something until you've got the keys in your hand.
That's right. Self-custody.
So that's right. So anyway, so yeah, hopefully it'll be fun. Please come out, talk to me. Well, I'm happy to talk about this all day long. Oh, was I sharing? Come on now.
Nope. Sharing our
Wasn't.
faces.
All right. Sorry about that. I'll just flash this up. I gotta be better about that. I was trying
there it
to
is. Bitcoin 2026.
Yep.
Looks good.
It is registered. So anyway.
So what are you going to do with that? So you're going to bring that to the Bitcoin conference in Vegas in April. You're going to, are you just going to give out subspaces? So Jason at Bitcoin 2026?
No. Well, yes, if you're there and participating, but there's a bit, as you know, is a little bit of a process. You have to send me a certificate request.
Okay. So you'll have your laptop though, right?
Yeah. Well, I will, but if there's people, let me share again here. Sorry, and then we'll kind of end on this, I think. So there's two types of activities that you can, if you want to. Now, Jason and I are going to talk about setting up the software in an upcoming episode. But the easiest way to get a name that you want for yourself, a top level name, is to download this Akron wallet, akron.io. That gets you into the process of bidding and securing and registering. You have to put some Bitcoin in there to participate that. There's another thing called Nacho, which is Nacho IO? No, it's not IO, is it? Is it? No, hang on, folks.
No, I think that is it, but it's just not out yet, right?
No, I thought it was.
Nah, I don't think so. That's the at Bitcoin subspaces.
Yeah.
Maybe you can go to the
nachos.
Easy nacho recipe. The GitHub. Yeah. Would it be on the GitHub? I don't think it's out yet though. I think the only thing that's out is the mobile app for Apple and Android.
Oh, maybe that was it. Yeah, let's look at App Store. Yeah, I'm sorry, I'm a developer, so that's why it's trying to go to the development. Hang on.
Just throw it in Google,
folks. Yeah,
there you go. Which makes me think, will we have a decentralized search engine of some sort where it doesn't keep your data and things like that? I wonder if something like that could be built.
Yeah.
Think about all the power that Google has by getting everyone, the whole world's search history to know what's popular and everything.
Yeah, exactly. Why am I not finding it? Nacho.
I have it on Android.
I thought they had it also in App Store. Maybe they didn't.
Is there a web-based, Google Play Store?
Search Nacho.
There it is.
Here it is. All right. So this is an Android app.
Hey, 50 plus downloads, not terrible.
So what it allows you to do is to request a subname and you can put in a request, like frog at Bitcoin, and then you add it to. So what is it doing? It's actually creating a key pair when you first initialize the app, and then each one of these requests are what we call a derivative of that key pair. So each one is unique, but they're controlled by the passphrase that you set up with the app itself. So once you have one of these things set up, and it's just a matter of just asking for it, then you end up making a request. I don't know if any of these screenshots.
So you ask for it, but there's a fee, though. I believe you can't. They're not just giving them away for free, right?
Well, the at Bitcoin ones, they are not, but that doesn't mean if you're a top level space owner that you have to charge for it.
That's true, right? But this one in particular,
so
yes.
Say we make one Jason and Andrew show, and we just want to give away the ones. What's required is and I don't see a screenshot of it, but requires that you would then have to send the name operator, the top level name operator, the request for that certificate name, and then the operator would make sure that no one else has already gotten it, because you can't reissue more than one. And assuming that it's clear, maybe in the future they give you a way to check that yourself. But assuming it's clear, and they say, and they're not charging you for anything, then they add you to what's called a zero knowledge proof set, and then the hash of the top of that proof set is then committed onto the Bitcoin blockchain. So evidence of your subname is forever embedded on there. That's the proof that subname works. And then they return to you the actual certificate, which can in itself be proven without looking at the blockchain that it's valid. Maybe we'll get into that in another discussion.
That's a good topic.
But this is the kind of mechanism that I'm going to use for the workshop.
All right, now, so that's one way, right? So the user comes and I'm like, hey, Andrew, I want to send a request to you for Jason at Bitcoin 2026. That's one way. So that's from user to operator. But isn't there another way for the operator to just say, you know what, I'm just going to make all these,
sure.
Right? Okay, so operator can do it as well.
Yeah, the operator can just, there's a mechanism in the command line of the operator code that just says, make them up, add them. Like I'll add Jason, I'll add Andrew, I'll add, my dog's name because I don't want someone else to have it. And it's yours. I mean, it's the whole point. It's like the top level name is yours. It's your property. You can see fit to do with whatever you want to do. Maybe you use these top level names to get into a special club website. You might remember the apes? What were they? The
Bored Apes?
The Bored Apes, right.
Yeah.
Those were NFTs, not on Bitcoin, but they were NFTs that you had to purchase, and then that got you access into like websites and events and things that only the other Bored Ape NFT owners could get into.
Yeah.
So similar things can be done with this. So it's like, sky's the limit to think about.
Really is.
Maybe one of our listeners will have an awesome idea and build something cool. So.
Now, here's an idea that I'm thinking about while we're talking and thinking through this stuff. Would it be possible, a cool tool, this seems really cool to me, where you could write some sort of command or some sort of script, and it will have you create all the possible subs, all the combinations. You could say create all the 1 digit, all the 2 digit, all the 3 digit, and it would just create thousands of subspaces. You think that's possible?
Sure. Yeah, there's really no limit. And I haven't really tested this. Like, does the zero knowledge proof generation time expand as the number of subnames gets added?
Does it time out?
No, it takes a couple minutes on my M1 Mac, but the question, but I haven't been like throwing thousands at it. So maybe I'll have to try it. But the point of it is like the way Merkle trees work, the zero knowledge proof mechanism, the all that's required is knowing the top level hash, the root hash of that new tree with all those subnames in it. And once and that never changes in size. So and the commit onto the blockchain of that is always the same size, no matter how many subnames are created under it.
That's a great design right there, because of course, right, we're going to have the spam on Bitcoin, the data on Bitcoin, and it stays, I think it was 42 bytes, right? No matter how many subs, the commit to Bitcoin remains at 42 bytes, which is very low.
Yep. And for those that are paying attention, that fits within the BIP 110 spec.
BIP 110.
As it's currently expressed.
Knots. It's compatible with all of it.
Yeah.
Awesome.
Today it is. So we'll see. I mean, theoretically that could change, but at this point, it's like, it's a lot of momentum behind what Bitcoin is, and changing it is a long and arduous process. So, and for good reason.
Yep.
And for good reason. So anyway, anything else you want to chat on today? We're getting, we're pushing our like, I think max show size today.
Might be a record.
We were wondering what we were going to talk about today. So
that was a great show, man. Great show.
All right. All righty then. Well, should we wrap it?
Yep. Let's do it. Thank you, Andrew. Thanks for watching, everybody.
Thanks, Jason. We'll
talk to you
catch
next
you guys next time.
See ya.
Bye now.